What's going on, guys? Corey Smith here, CoreFX, bringing you another pre-week market analysis video. I hope everyone had a good trading week last week. We had some pretty big moves in the market, so we're starting to see some volatility coming into the Forex markets. As we see on this chart here in front of us with the relative performance, you got some 2-3% moves for the week for single pairs, which is pretty strong movement. This is a really good trading month typically. First quarter of the year, as I usually say, is usually a great trading quarter, and we're starting to see that here with these pickup in volatility this week. So this week's video, I'm going to be going over what happened last week in the markets, the week of January 21st. I'm going to go over the top performing and underperforming currencies, and I will go over what is going on next week in the markets, what to look for, what news events to trade, and what the charts are telling us going forward to start the week here. This video is going to be a little bit different than the last one in the sense that I'm not going to be doing a technical analysis video on YouTube here through T3 Live. I have now switched that over to part of my students only program. So if you're a student of CoreFX, you get the weekly analysis video done privately just for the students. So I will continue to be doing these pre-week market analysis videos, going over all the news events, the major pairs, top performing, underperforming, everything going on in the markets. But the actual technical analysis breakdown of each individual pair is going to now be limited to my students of CoreFX trading only. All right, that being said, I'm going to go ahead and jump into last week here, January 21st. As I said, you guys can see here on the relative performance chart, we had some strong movement this week, really all across the board. The US dollar being weak was kind of the leading factor in charge there. As you can see, the dollar, New Zealand dollar, Canadian dollar were the bottom three performing pairs, but everything performed positively versus the dollar this week, as you can see on this chart, and that shows that the dollar just got crushed across the board. The Swiss franc, the British pound, and the Japanese yen, as you can see here, they were all top performers, with the Swiss franc leading the charge, 3.25% move. So that's a really big move for 1 week time period. We're looking at some really strong volatility in the markets, and usually when you see moves like this is telling you that there was a lot of volatility and there was a lot of money to be made essentially at the end of the day from moves like this. So as traders, we want there to be movement, we want there to be volatility, and when we see weeks like this with a lot of movement, a lot of volatility, we have a lot of trading opportunities. So hopefully you guys had a good week last week. Hopefully this volatility continues and we still see some strong moves in the Forex markets moving forward. I think we're going to, and all we can do is get prepared and make sure that we are there and ready to take advantage of the volatility, disciplined, following our plan, and all we can do is be as prepared as possible. That's the purpose of these videos. That's why I try to make them for you guys, and hope you guys do enjoy them. So I'm going to jump into the index charts here. These are going to be the charts that are indexes for each of the major currencies. So I'm going to show you the price changes of the dollar, the euro, the yen, the pound, the Canadian dollar, the franc, the Aussie, and New Zealand. Basically just go over some major technical levels and setups that we have going on these charts and see if we can line them up with the fundamentals going on in the news this week and next week. US dollar, we saw same story with the head and shoulders, broke lower, hit our target, moved sideways. We thought it could pull back a little bit or something last week, and this week it just continued to fall super hard down to 88.50 down here. This is actually a weekly support zone, so this is now hitting a very strong level. As you can see, we had a pretty strong move down all through December and into January, so we could see some correction at any time now. But with that being said, I would not be going against a weak dollar. I would not be looking for longs with the dollar, as the dollar has just continued to show us that it's weak, getting crushed. So I would still be looking for shorts with the dollar, but be cautious of a correction. As you can see, we had this long rejection wick off of support Thursday. Friday we saw the same thing. We have a little bit more of a bearish candle, but you see the wick tried to push price lower and came back and ended up closing up here above this weekly support. So as of right now, the support is holding, and we're going to have to wait to see if it holds or price continues to move lower this week and doesn't look back like it has been doing. That takes us over to the euro. And the euro pretty much has been doing the exact opposite of the dollar. The euro has just been ripping higher. The dollar is at 3-year lows. The euro, I believe, is also at 3-year highs, and you can see we've been making a series of higher highs and higher lows in this uptrend. Last week we were here. I figured we might get a pullback last week. I was expecting a potential pullback to here before continuing higher, but price, like the dollar, just continued to rip and moved higher and set a new higher high up here. So again, it's going to be the same story as with the dollar. We don't typically want to chase this long as it's been making such a strong move. We're so far from the moving averages. We don't really want to chase it, but we don't want to sell short against this long momentum. So the euro is another one where I will be looking long on it still, but I would like to get a little bit of a dip, a little bit of a pullback before this uptrend continues, so we can get a little bit more momentum, a little bit more buyers back into the market, and just get in at a better price before we go chasing this parabolic move higher. Japanese yen, we have had a very strong move from the yen as well. We were down in this trading range for a few weeks, and then we blew out, and it's just hasn't looked back since. We're now up at a strong overhead resistance here at 88.50. We are in an uptrend, and again, we want to be looking for longs with this pair as well. However, we need some kind of pullback or break above this resistance, some kind of confirmation or change that we really are going to continue higher before we jump right in. But all in all, we will be looking for longs against the yen, as the yen is in a nice uptrend and we have price just ripping higher. Takes us to the British pound. Similar story to the euro. We've been in a nice uptrend. We have made a very, very strong move over the last couple weeks, blown into new highs, set new higher high, and it's kind of been choppy up here since then. I do think we'll come back down to this 136 area here before price then continues higher, but I still see this uptrend continuing. I still see the pound remaining strong, and I'll still be looking for longs within this trend as we get some better entry points. CAD started back into a nice uptrend with a higher high, higher low. We had this nice pennant form last week, and price broke higher out of it, setting a higher high. And I do think this price is going to continue higher. I think price is very easily going to come back up to this 81.50 level up here. It's just a matter of how we get there, how strong we get there, and what price action looks like. So fundamentals is where we're going to really rely on how we get there. If we have some strong data coming out of the Canada, that is something that can drive this. Canadian Bank of Canada is very data dependent right now. They've begun a rate hike cycle. They've been hiking rates, and they are extremely dependent right now on the data coming out of the economy. So if we have some data, this gap here can be filled relatively quickly. If we don't, then we could have some slow, choppy movements as price makes its way back up here. But unless there's any real game-changing negative data, I think the CAD is on its way up to 81.50. I think that's very safe to say that price will most likely hit here in the next couple of weeks. That being said, we could have some fundamental news that shifts this outlook, and we could have the CAD tank back lower, reverse, but price action is telling us 81.50 is the next major target that we can expect price to move to. Swiss franc, another one you can see is just ripping, ripping, ripping. You can see from this past couple months, the moves it has made has just been unbelievable. This week you can see this is the 3.25% move that we saw. You can see there's huge gaps in these candles, huge gaps, and then there's just been some wild moves. We did have a very strong rejection wick. Price broke above this weekly resistance zone, came up and was able to hit 101.50, but immediately was pushed back lower. Then we gapped, pushed it higher again, but this 101.50 area is what seems like might be hard for price to break. As we came up and set this higher high here, after we set this higher high, we're now in need of a higher low somewhere in this area to be formed. So I'm initially, after that strong of a move, for sure expecting the franc to pull back. Whether it pulls back hard, soft, or just moves sideways before continuing higher, I think we're going to get some kind of a breather, some kind of a correction or consolidation phase that is going to allow this currency to catch some breath, the moving averages to catch up, and some normalcy to come back into it before we continue this uptrend higher. So that takes us over to the Australian dollar. The Australian dollar is Also in an uptrend, as you can see on this chart, we are at a very strong high point here. If we switch to the weekly, you can see we are now up and above this overhead weekly resistance, which we haven't been above since 3 years ago. So this is a very, very significant move this week. This is a very significant level, and we have now seen price close up above this. So basically what we're seeing here is very bullish price action, very strong uptrend, and now a break and close above a very strong resistance. Sorry about that, I had to pause the video for a second, but yeah, essentially the Aussie is showing us some very bullish price action. Price is continuing to make higher highs, not really pulling back much. We're barely seeing these little dips as price moves higher, so we're really just seeing a lot of bullish price action. We're at a very strong level here, and although we did break and close above, sometimes we'll get these outside reversals. We'll have price, as you can see down here, like this pair did, perfect example in this downtrend. Price was moving lower, 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 broke and closed and set this new lower low, breaking outside of below this support, outside of this area, breaking structure. And then what did price do? Immediately shot back and reversed all the way back up to now where we are here. So this could be an outside reversal. We could have price come up and close here and then drop off really hard, but we'll have to wait and see what price action does. If price remains to continue to trade up here around this 81 area above this resistance, I think we can continue looking for longs. If it pulls back, we'll have to wait and see. Maybe that's a good opportunity to get long as well, continue higher. But if we see a strong, hard reverse off of this area, then that's something I would be worried about, and I would not be looking to take longs, particularly after that price action. New Zealand dollar, as you can see, we've been ripping higher as well. We did get a pullback this week. We had some data out of New Zealand, some strong CPI and missed data that gave us this pullback. But as you can see on Friday, might be a little hard to see, but on Friday we had a very strong bullish engulfing candle bouncing off this 73 support. So really just showed that the markets are shrugging off that poor data and continuing to move higher regardless. So I think they're going to shrug it off. I think we'll see this uptrend continue. We got a nice little pullback, which gave us a good opportunity to catch some breathers and get some buyers back in. And now I think we might have some more buying pressure as price will continue the uptrend now, is my opinion on the New Zealand. So that takes us into last week's news events. We had a pretty strong week last week as far as data goes. Nothing too crazy, but we had a couple central bank meetings. We had some World Economic Forum meetings. So really definitely had some stuff going on. And I'll go over that real quickly with you guys here. Starting in Japan, Sunday we had nothing going on. Monday we had the Japanese Bank of Japan had their rate statement, their monetary policy statement. They issue their policy stance on interest rates as well as their outlook on the economy. And as expected, they kept their rates unchanged, still in negative territory, and are keeping their monetary policy on track. They're not changing their monetary policy. They're continuing with their quantitative monetary easing, and really they said they're going to continue it as long as necessary to hit the 2% inflation target. So they do expect inflation to hit the 2% by the end of 2019, which is the same outlook they've had. And Kuroda said that Japan's economy is expanding moderately, but inflation remains weak. And although we know inflation is weak all across the globe right now, that's something that all the central banks are following. Japan's is particularly weaker. They're consistently seeing inflation numbers below 1.5%. So most of the other nations struggling with inflation of the major economies, that central banks are holding back on hiking rates or anything because of these inflation numbers, are typically over 1.5%, or at least hitting 1.5%. Japan's been consistently under it, so it's definitely something keeping them held back. They have been seeing some solid growth out of Japan for the first time in years, as we've gone over in last week's video. So there is definitely starting to be a shift in the tide, and possibly can see some monetary policy changes in the next year or two, which hasn't really been the case at all recently. So this is definitely something to keep an eye on. But as of right now, they have not changed anything with the outlook for the Bank of Japan. So taking us into Tuesday, we just had the press conference after the Bank of Japan's meeting. Tuesday started the World Economic Forum meetings. This is over 90 countries meeting in Davos to go over the the global economies and talk about trade deals and that outlooks. And Donald Trump was the first U.S. president to attend this meeting since Bill Clinton attended it. So it's been a long time since we've had a sitting president attend the meeting. He made a speech. It was pretty in line with his rhetoric, typically. He mentioned how America's doing great, the economy's been booming, and basically just said that America's a great place to invest in right now. America's open for business. He kept saying the strength of the economy, the tax reforms, the infrastructure spending. He's just talking about the environment being great for investing and growth, and trying to get countries to come and invest in the U.S., and pretty much was in line with his America First type of policy. Definitely keeping the doors open to trade. Said that they're not opposed to free trade, but wants more fair trade practices between the U.S. and other nations. So that Tuesday really just kicked off the economic forum meetings. Nothing really other than that going on. Takes us into Wednesday. We had the Euro's Purchasing Manufacturing Index, the PMI numbers that happen every month all at once. They were mixed numbers. The services numbers all beat and manufacturing numbers all missed. Basically just showing the services industry's confident on business climate and performing, and the manufacturing industry is just a little bit slower, a little bit further behind. It took us into the pound's average earnings, which is their unemployment rate and their wage growth. It came in as expected at 2.5%, and unemployment claims were larger than expected, so more unemployed people in this month than they had projected, which isn't a very good sign, but it wasn't by that much, and average earnings continued to grow at a consistent level. No miss there. Unemployment rate remains at 4.3%, which is very strong. So the pound did actually continue higher, even though we had a higher claimant count. The pound continued higher as it wasn't strong enough data to really do anything. The markets just shrugged it off, and the pound just has all eyes forward. New Zealand dollar, this was a pretty big mover, one of the strongest moves I've seen the New Zealand dollar take in a long time. This is the CPI, Consumer Price Index. As you guys know from my videos, the Consumer Price Index is the strongest and most relevant inflation reading of data there is. It gives us a percentage change in the price of goods that consumers purchase. So it just shows us the rate of inflation prices are growing at. And as you can see, the expectation was for 0.4% over the past quarter, and we got a 0.1%. So that CPI number really strongly missed. And inflation is something that we have not seen pick up very strong around the world, even though the economies and growth is booming, and the global markets are really doing really well. Inflation typically picks up in times like this, and there just hasn't been much inflation pickup, which is why a lot of central banks have been hesitant to hike interest rates. And as we know, as currency traders, hiking interest rates is very bullish for currency. And New Zealand dollar is not looking to join the rate hike yet, as they need some more data to back it. And missed CPI numbers like this just shows us they're even further away from starting rate hiking. And that really did some damage to the New Zealand dollar right off the bat. We saw about 120 pips tank in a couple of seconds. So a lot of people got stopped out of trades for further than their stop loss was. There was a lot of slippage, a lot of order fill that happened all at once, making people's orders filled 100 or so pips from where they wanted it to. So this definitely is not the kind of trading event we want to see, unless you were lucky enough to get on the right side of it, which still is really just too risky to want to try to gamble. But that was a tough one there. This was a very unexpected miss and a very unexpected move. So these CPI numbers continue to be one of the most volatile events, and as the markets evolve and cycle and go through phases, there's different data that's more important at different times, and CPI is certainly the one that is what we're looking at now. Wage growth and CPI, as I've been telling you guys, are the two events that we want to be the most wary of currently. So after that, we had during the day Wednesday, Steve Mnuchin, the Treasury Secretary of the U.S., was talking about the U.S. dollar, and his comments really made the dollar continue to tank. He was talking about a weak U.S. dollar being good for the economy, and it led to the U.S. downfall, the dollar's downfall, and continued weakness due to him really just jawboning the dollar lower, saying whenever somebody high power in a government or central bank talks about wanting the currency to be weaker or stronger, usually the currency responds to what they say. And since he said that the low U.S. dollar helps the U.S. economy, this showed us the dollar's weakness continued, as it shows the government and the U.S. is likely to not manipulate the currency, but if they were making any actions, it would be towards pushing the dollar lower, if anything. So it really just shows that's where they want the dollar to go, and the markets respond by pushing the dollar that way with the self-fulfilling prophecy type of stuff going on here. Thursday, we had the European Central Bank meeting. One of the biggest events of the week. Rates remain unchanged as expected. Draghi stated there are very few chances that the European Central Bank will change interest rates this year. As I said last week going into this event, there was a slight possibility of a December rate hike, but Draghi's trying to keep that off the table, not shock the markets at all. He tried to keep their outlook and everything pretty on track to not surprise the market. He also stated that they will continue their stimulus and quantitative easing as long as necessary. Quantitative easing, again, is just the central bank's purchasing of government securities or other securities, really, from the market to increase the money supply and keep interest rates low. So a lot of the countries around the world have been taking part in quantitative easing. Some are starting to pull off. And Mario Draghi said basically they're going to continue their stimulus and quantitative easing as long as necessary. He didn't surprise the markets at all, like I said. The euro just chopped around, no real crazy moves. Investors still feel that the European Central Bank will have to tighten monetary policy and hike rates in the near future with how strong data and everything in growth is in Europe. But as of now, Draghi and the European Central Bank are showing no change in policy in this meeting and keeping the ball moving forward. So we're going to continue to watch data out of Europe and see if we can get a change to this outlook at all. Right after that, we had the Canadian dollars retail and core retail sales, which were kind of mixed. We had a missed expectation at a retail, but core beat. So we saw choppy CAD, and markets really were just waiting for the CPI numbers to come out on Friday. So whenever we have a big event like that later on in the week, it kind of overshadows the little ones leading up to it. So didn't really see too much going on there. And then Friday, we had Trump's speech at Davos, and like I already told you guys about, America's open for business, and talks about the strength and prosperity going on in the U.S. economy, trying to set up for foreign economies to invest in the U.S. The pound had their preliminary GDP as well on Friday. As we went over last week, this is the first of 3 readings for the GDP, so it's a big reading, and it beat expectations. However, their growth is not even. The quarterly expectations was good, but they ended the year with annual GDP of 1.8%, which is slightly lower from the 2016 reading of 1.9%. So year over year, they had a decrease in growth. So this is showing the bigger picture is getting weaker growth. Slight weakness in the pound after this reading, but this is all, as we know, due to Brexit and everything that's going on around that in the UK. So they're continuing to see strong data, although the growth didn't pick up this year. That really isn't much of a surprise to me because Brexit has really been looming so much over the head of the UK. There's so much uncertainty until these deals have been made and Brexit can be finalized that there's not much new investment going on in the company, not too much new growth. Companies aren't looking too much to expand and reinvest capital and hire new employees and buy new buildings and all, with the whole uncertainty of Brexit looming. They don't know what changes are going to be made, what deals are going to be made. There's just so much up in the air that things are at a pause right now in Great Britain as far as expansionary policy and all. So I think this is pretty normal. I think it's nothing to worry about. I think the pound's going to continue to rip higher. I think the Brexit deal is going to come to fruition in the next medium to long term, over the next year or so. And once that is done, I think the pound will get back on track and will continue to see strength. And I think this GDP will flip around and we'll start seeing some growth coming out of there. But following that, we had the Canadian dollars CPI. Expectations did tick lower, ending 2017 with a 1.9% year-over-year inflation. This is adjusted lower than in November when they were expecting year-over-year to be 2.1% gain. So we did have a slightly softer inflation than we were expecting in November. However, 2%, as we know, is the inflation target of most central banks. So 1.9% is still pretty on par with expectations. The CAD was really choppy on the news as investors tried to digest the information and take in what the results were. I think we might see a slightly weaker CAD to open the week, but I think the Canadian dollar is still going to continue to be strong. I think the Bank of Canada is still going to continue to want to hike rates as long as their data is supporting it. And although the CPI missing here slightly, I don't think it's enough as of right now to change the hike plans of the central bank. And I think it's still going to continue to see a bullish Canadian dollar moving forward. So that takes us into the US dollars advanced GDP, which did worry me slightly more. We had an unexpected slowdown in growth last quarter of the year. Numbers slowed due to consumer spending growth picking up, but imports picked up. So imports deduct from GDP growth because part of the GDP is exports minus imports. So when you're importing a lot more products than you're exporting, you have a negative balance sheet, negative trade balance, and that subtracts from the GDP growth. So we had the highest expansion of imports in this reading than we've had in 7 years. So because there's a huge consumer spending is at very high levels in the U.S., and that's a good sign. However, the imports the U.S. have brought in have picked up as a response to the consumer spending. Not our exports haven't picked up as much, and because we're importing that much more, it's having a negative impact on the GDP. This ends Q4 with a growth rate of 2.6%, which is down pretty big from Q3's reading of 3.2%. That puts 2017 growth rate annually at 2.3%, which is still up significantly from 2016's 1.5%. So it's still a great reading, not as strong as it could have been. Trump was calling for over 3%, and that's what we had back in November and thought it could have closed with, but this past quarter changed that number. So still a very strong reading out of the U.S. It is a little worrisome that it's that off from the 3.2, but as you guys can see, the dollar is ripping lower no matter what's going on. So we'll just have to keep an eye on price action with that U.S. dollar and see if any other data continues to pick up, or if we start seeing more misses across the board that might give us something to worry about. Next week, this moves us into, again, we're starting a week off with nothing on Sunday. And as we know, Sundays are not really good trading days for Forex markets. Occasionally, a couple of Sundays, a few Sundays a year, there'll be some news events going on, and they will be a day that I'll be looking to make some trades. But for the most part, Sundays are analysis days. We wait to see how the gaps open up from the weekend. It's the only time we have gaps in the FX markets because the markets don't close Sunday to Friday. But when they close for the weekend, we then have data over the weekend that's not traded live. And then when the markets reopen, we have a gap, a change in price as investors react to what happened while the markets were closed. So Sunday's a good day to analyze, get your charts marked up, figure out what's going on for the week ahead, get yourself planned, and watch how these gaps open up. Then Monday, not very much going on either. We have trade balance out of New Zealand and the business confidence surveys out of Australia. Basically survey business owners to get their future outlook on the economy. And as we know, this is a future leading indicator to let us know how businesses feel is typically going to show us what the economy is going to be doing, because how they feel and react has a direct impact on what the economy does. Tuesday, we have German CPI for the euro. It's not European CPI, it's just one country, but Germany is one of the biggest economies there, so can have some impact. It's the big inflation readings for the country, so could have some impact. Then we have Spain's flash GDP, first GDP report out of Spain, another big economy in Europe, so this could cause some movement, but again, nothing too crazy, just something to keep an eye on for euro cross pairs. US dollar then has consumer confidence reading. This is a very strong report. Has been at record highs, shows consumers confident for the economy, and if people are confident, they're likely to spend money and stimulate the economy. If they're not feeling confident, they're less likely to spend money, less likely to impact the economy. So this is another future-looking indicator and something that we do like keeping an eye on. Not the craziest of moves, but something we definitely keep an eye on. Then we have the Bank of England, Governor Carney speaking to the Economic Affairs Committee. Again, nothing too crazy, but we want to keep an eye on 4-pound crosses as this could cause some volatility. Then out of Australia, we have CPI. You guys already know the deal with this. Very, very, very strong report. Can cause some very strong moves, so be careful trading it. And before and after it offers off some trading opportunities, but sometimes with the really big events like this, as you saw with New Zealand last week, it might just not be worth the risk trading it. Keep an eye here on CPI for Australia, though, as this is going to be a very big market mover. Then we have manufacturing PMI out of China. You guys know this is our Purchasing Managers Index. Gives us an idea of what is going on in the manufacturing sector in China, one of the biggest economies in the world. Then we have Trump speaking on Tuesday night. He is giving his State of the Union address that all presidents give after their first year. It'll be done in Washington, D.C., and it is definitely something to watch for the U.S. dollar. If he mentions the dollar at all, we could see it move based off if Trump says we are going to see or want a strong dollar, we could see the dollar go up. If he says we want to see or are going to see a weak dollar, the dollar could go down. So definitely keep an eye on that. So then on Wednesday, we have, again, another week where it starts off slow and then it gets pretty heavy in the middle of the week to end the week. Out of Europe, we have German retail sales and Spanish CPI. Again, Germany is just a big country in the European economy, so any data out of there is something to keep an eye on. Spanish CPI, a little bit to keep an eye on, but really Europe's CPI estimate afterward for all of Eurozone is going to be more important, but just anything with CPI or big economies in Europe, that's why they're always highlighted as medium alerts here. It's something to keep an eye on, not anything too crazy, but definitely worth keeping an eye on. Then out of Canada, well, we have NFP this week, so it's the first Friday of the month. Employment report out of the U.S., and there's always a non-farm payroll estimate done by ADP. This is like a third-party report, not done by the economy or the government, but by a third party, and it's just an estimate. They give their outlook on what they think the employment rate change is going to be. Not typically a big mover, but on NFP week, this can give us a little bit of an insight into what the numbers might be on Friday. So Wednesday could cause some moves, but we have a lot bigger events, as we have the Canadian dollars GDP, monthly GDP report. Missed last meeting, and with the Bank of Canada in a hike cycle, they're very dependent on data right now, and GDP month over month is a big data report for them, and this caused some very strong moves from the Canadian dollar, so definitely something we want to watch. Then Wednesday, the event of the week, the FOMC and the NFP, but the FOMC meeting, U.S. Federal Reserve has their monetary policy meeting that they have 8 times a year. This one, there will not be, it will only be a rate decision and the report issued. There won't be a press conference after, as we do see out of some of the reports. This one does not have a press conference after, nor will they issue an update on their economic forecast. So really, it's just whether they're hiking rates or not. They're not likely to hike rates this meeting, but they should open the door to a March rate hike, especially with how much the dollar has been getting crushed. I could see a little more hawkishness coming out of this FOMC meeting. Core inflation has also picked up since last Fed meeting, keeping the Fed hike forecast on track for there being a rate hike in March. So definitely an event that we want to keep an eye on. Definitely something that causes strong moves in the dollar. There's no meeting afterwards, so not as volatile of an FOMC statement, but it is definitely still a strong mover. Definitely still something we need to watch. Manufacturing PMI out of China. This is the more reliable manufacturing data number, as I've gone over in my videos. So this is something we want to watch. Very strongly correlated with the Australian dollar and New Zealand dollar. So if you're trading either of those pairs on Wednesday night, be aware of this reading because it can cause some moves across those pairs. I keep saying German. The pounds manufacturing PMI missed last reading. Not the biggest mover, but definitely worth watching. Shows the Purchasing Managers Index in the manufacturing sector in Great Britain. And as we saw, their services sector has been doing good, but their manufacturing sector has been a little bit sluggish. So we're definitely want to keep an eye on this, especially if you're trading any pound crosses. Then the same manufacturing PMI out of the U.S. on Thursday morning. And then we have construction PMI, so another PMI out of the pound just in the construction sector. Definitely good to watch, as we want to keep an eye on what new building is going on, what the confidence levels are in construction industry as it shows growth. And with Brexit going on, like I told you guys, there's a lot of hesitation with expansion in the UK until a deal is worked out and things are a little bit more clear. But these little reports give us little outlooks and leading indicators on how these areas are doing or going to be doing. Then we have the non-farm payroll. Big U.S. dollar monthly first Friday of the month report shows the job market. The unemployment rate shows how many jobs were created last month, and it shows the change in hourly earnings, so our wage growth, which is really been the biggest thing to watch. Our 4% unemployment rate is just killer. We've been creating strong jobs every single month, but wages have not been going up in par with the expansion of the economy and the growth of the job market. So that's something the Fed wants to keep an eye on and really needs to see a pickup and change before there's too much more growth potential and outlook and hiking and all that. We do need some pickup in wage growth. We'll have to wait and see what this report gives us, but it's always a strong mover. Always expect the dollar to be very volatile around this event. If you're in any US dollar trades going into it, hopefully you're in profit and you can adjust to break even or so, or just get out of your trade leading into it. There can be some very serious slippage and spikes in price during this event. So it's a crazy trading event, especially if you're new to trading. I would not recommend trading NFP with real money. Maybe get a demo account, try it out, start analyzing it, watching it, seeing how price moves, seeing how spreads change around it. All this stuff is good to get used to and pay attention to. However, I would not recommend trading it with a live account unless you're very experienced and have done it before and know what you're doing. But that pretty much sums up this week, guys. Again, I'm not going to be doing a technical analysis video, unfortunately, on YouTube anymore. That is going to be premium content now that is going to be included in my course only for my students. So I hope you guys do enjoy these videos. I hope you guys enjoy T3 Trading's page. They got a lot of great content. Make sure you subscribe to them. Check out their other videos, some of the biggest names in trading on this channel. So definitely check out some of those guys and how they're doing, especially if you like trading the equity markets. But I really appreciate you guys taking the time to watch these videos and catch up with what's going on. I hope you guys have a great trading week, and I will catch you next week. Thank you.